Ready, Thomas?
And your go.
Okay. Welcome to the second half of the fourth day of the 10th annual SISE conference on sustainable infrastructure and the Gigaton Challenge. We've had some amazing speakers thus far, a Nobel Prize winner, former secretaries of energy, COOs of change-making organizations, the co-founder of the Sunrise Movement, and powerful grassroots activists. This panel is another highlight in our week-long event. We focus on the double bottom line entrepreneur, the startup that has the audacity and the financial incentive to change the world. What makes this particular panel especially unique, powerful, and important, each speaker comes from the widest variety of investment experiences. Amy Francetic of Buoyant Ventures provides the insight of a traditional venture capitalist. By the way, Amy, you've been amazing in helping us connect with thought leaders in the Midwest. Thank you so much. And also, we appreciate your long history with the best nerds on earth. Thank you, Amy.
Woo! Best on earth.
Eric Burgertz is the CEO of Clean Energy Trust. To the fellows and everyone in the audience, Clean Energy Trust is hosting a webinar that dives deep into the Minneapolis-St. Paul energy ecosystem next week. Is that right, Eric?
That's right, yeah.
Fellows, and you guys from the Minneapolis-St. Paul ecosystem map, I told you guys did a great job. So Eric, we're going to have to connect you with their work. And then James Schulte, the director of Accelerate Growth at Exelon, essentially Exelon's I think CVC, Corporate Venture Capital Wing. Maybe you're part of this initiative, but we do know that you're part of the 2C2I initiative, which we celebrated on Tuesday. So thank you so much, James. That's an amazing project. Oh, by the way, you may want to hear about Giselle's venture. She pitched it earlier today, so you may want to find out about that. I know each of our panelists has prepared introductory and some remarks to the speakers on the panel. Be ready for some amazing questions. I will warn you, about half of the fellows are primarily invested on the investment financial aspects of this conversation, and the other half more activist-centered questions. To Jay and all the people that were piggybacking on his question, we'll probably have you lead off the second half of the question section. We'll focus on the investment side on the first half. We could run overtime, but we'll try not to. Amy, Eric, and James, thank you so much for being here. It is an honor. Thank you.
Thank you.
All right.
Thanks for having us.
So, Amy, do you want to, since you're one of the original best nerds on earth, do you mind just giving us a little background about yourself, how you got here? I know the fellows, and by the way, Eric and James, one of the consistent questions going along has been, how did you get to where you were, and did you know where you were going when you were in college and just after? Did you know the whole way, or has it been sort of a trial by fire? Go ahead, Amy, and then Eric, and then James.
Yeah, well, first of all, I've been a huge fan of SISE and the best nerds on earth since the beginning. So I'm so grateful that I get to participate again, and love what George is doing, and Thomas and Elizabeth and all the other folks that have made this very successful. I really miss not being together in person with everyone, because I loved interacting with the students, and you guys always did such a wonderful job of bringing together diverse people from different backgrounds and walks of life. And so this will have to suffice. But I did not have a path that was prescripted, and didn't have the benefit of what I see a lot of students doing now, which is majoring in sustainability or an interdisciplinary program that brings together sustainability, environmental, science, maybe energy policy. And I think that those sort of interdisciplinary programs are very appealing. I think that I went to Stanford, and if that was available to me, I hope I would have had the foresight to do something like that, because I think that it's a great preparation for life and your career, to have a lot of different ways to think about a problem from a different vantage point. But my work now, Buoyant Ventures is my fourth startup. So I'll just say very briefly, I'm launching this new fund. We're focusing on digital climate solutions. We want to invest in sort of software and hardware that can help address climate risk in the energy, transportation, agriculture, and built environments. Before that, I had founded and raised Energized Ventures with Michael Polsky. Before that, Clean Energy Trust, which is how I got to know Eric. And before that, I ran a consumer electronics company called Zowie, with making high-tech toys way early in my career. But I think if you're going to be an entrepreneur, you know, you have to be open to all those twists and turns in the road and kind of follow your curiosity. So that's always what sort of helped me move from one to the next, has been both my curiosity about what I really wanted to learn about next, and then definitely my relationships and my, you know, my network, my personal, you know, friends in the business have been super, super helpful to me. I've been very blessed to have a lot of terrific mentors and people that have helped me pursue those interests and kind of open doors for me. So I feel very strongly to try to give back to other folks as well. So thanks for having me. I hope that wasn't too long.
Eric, you want to take a shot? Thank you, Amy. Thank you.
Yeah, absolutely. Well, again, it's great to see all the faces in front of me, and you know, I've been a big fan of the program. And George, you know, you've been a catalyst for, you know, getting a lot of these young people engaged on these issues. So thank you for your work. So I am the CEO of Clean Energy Trust. You know, I joined Clean Energy Trust 7 years ago. Amy and I worked side by side for a few years, and then I took over when she rolled off to go raise funds for Energized Ventures. But my journey also has been, I would say, very non-linear. You know, early in my career, you know, coming out of college, I worked on Wall Street for the Federal Reserve. You know, as a financial analyst, very much thought, you know, my future was in finance and on Wall Street. Came to Chicago to go to business school at University of Chicago, thinking I'd turn around and go back and you know, continue in finance. But I actually became interested in strategy, and after business school, I started working in management consulting. And my clients, and this is, you know, this is over 20 years ago, but my clients were companies that, you know, made industrial products. So, you know, pumps, motors, you know, HVAC equipment, you know, boilers, water heaters, really sort of unglamorous stuff. And one of my clients was a lighting company, and we were working with them, and they, at the time, this is pre-LED, their technology was based on linear fluorescent lighting. And they went and did a large retrofit project for a manufacturing company in Wisconsin. And the project was really, at the end of the day, it was a lighting project. Everybody thought it was a lighting project. The manufacturer needed, you know, just better light. So they finished the retrofit, they commissioned the project, and literally the next day, the municipal utility rolls onto the site and, you know, is kind of scratching their head thinking, you know, we just saw this, you know, this massive drop of load, you know, is, you know, or what's going on? You know, are you, you know, are you sort of, you know, siphoning off power without properly metering it? Is something wrong with your facility? What's going on? And that's where the sort of the proverbial light bulb went off, where, you know, we all realized that this was not, this was really not a lighting sale. At the end of the day, it was really a financial sale, because you could actually monetize energy savings. So that's how I sort of, you know, by a stroke of fortune, started focusing on energy efficiency and demand side management. I ended up joining that company full time as chief operating officer. We took it public in 2007. I stayed on for a few years and then rolled off. And that's kind of how, at the time, Amy and I started talking about getting engaged with Clean Energy Trust. So that's kind of my journey in kind of a sort of a short take.
James, you want to take a shot?
Yeah, sure. Great to be here. Great to see your faces. So I got bit by the climate change and energy innovation bug spring of senior year, but I didn't have it before it. Like Eric, I thought I would go into finance, and that's where I was headed after undergrad. When spring of senior year, I took a class called The Political Economy of Nature, which was all about critiquing and understanding the relationship between capitalism and natural resources, starting with the great Smith, Malthus, Marx, and moving up towards the present with historical case studies. And that was at a time of growing awareness of climate change. I forget what round of international accords it was. It might have been Copenhagen or Kyoto, whatever it was, but that was happening, Al Gore and Inconvenient Truth. And so the light bulb went off for me that this was the mission that I wanted to dedicate my life to. Now, at the time, I was set to go to Wall Street. So I tried to get as much exposure to energy and electric power in the industry as I could at Wall Street. But again, things changed, and I realized that specific job wasn't right for me, but so I had that North Star, and I wanted to approach it from a different functional standpoint. That now was at the Great Recession. So I know many of you are probably wondering what jobs and careers are going to be like in this moment of macroeconomic challenge. I tried to network my way from Citigroup into a job directly, actually at Green Order, for those who know Green Order and David Shapiro and that team. Didn't happen. So I decided to go back to grad school. I looked at the electric power industry and what was happening. And for me, I don't have that hard engineering side, although I like it and had some aptitude, but so I instead decided to focus on the policy, regulatory, legal aspects of the problem and opportunities, as well as the finance, business, marketing, strategy side. So I got my JD MBA at University of Chicago. So Eric and I share that in common. Focused a lot on this space on the different sides of it. Interned in Exelon in legal, worked with 2 different clean tech startups, one commercializing a novel electric motor, one commercializing a kinetic energy recapture technology. Worked at Kirkland and Ellis, a big law firm, doing some solar and wind stuff, and also interned at McKinsey, given McKinsey's work on climate change. This is a funny, again, just how I think, my advice is always network. Like Amy said, be curious and be open-minded because it takes different paths. I went on this venture capital trek to the West Coast during the JD MBA, and we went to Draper Fisher Jurvetson and met this guy, Don Wood, who's one of the only partners in the clean tech boom of the aughts who made money. He invested in Tesla, doubled down, rode it through. Invested in Solar City, made money, and a lot of other venture funds had bad returns in the space, and that was why you saw that pullback. Don did it well. Don gave me the advice at the time: don't go into VC straight out of grad school. You don't want to do it. Go into the industry, come back later. So I ended up going to McKinsey in part because of his advice. Then 2.5 years after that, was recruited to Energy Impact Partners, now the largest energy tech venture fund and PE fund in the world. Turns out Don joined shortly after I joined as a senior advisor to EIP. So we ended up working together as colleagues at EIP. So you never know what's going to happen. And then from EIP, I was recruited to Exelon to run our venture studio and kind of a combo of early stage investing and product business building, kind of like an operating partner. So yeah, again, like Amy said, stay curious and figure out what that North Star is for you, knowing that it's going to be circuitous and sometimes feel lateral and sometimes feel delayed. But I feel very lucky that with persistence, it's paid off. So.
Well, thank you. So it sounds to me, if I connect the theme, it sounds all of you had sort of an experimental professional path where you were testing. And it sounds like even Eric and Amy, I don't know if I heard it, I may have missed it, but even your connection through to the Clean Energy Trust was almost serendipity too. So it sounds like there's not really a clear pathway for all 3 of you, it sounds to me.
Right.
So and that's probably good news to all the fellows, especially now those that need.
And don't give up, because I recall Amy. I don't know if I've shared this with Amy, but I was a volunteer at the Clean Energy Trust Energy Challenge. I think it was probably in 2011 or 2012, and I'm a grad student. And Amy's up on stage speaking so powerfully and orchestrated the event so well, and I was just so impressed. So this was like 8 years ago, and now here we are, friends, colleagues, fighting the good fight together on a panel. So don't give up and keep hustling.
You must have been the most overqualified volunteer that we. No, that's so great. That's so great. I mean, and Chicago's a great town for networking. It's somehow like a little easier than it is in other cities. You know, I've lived in New York, I've lived in California and the Bay Area, and people are nice here. So people are generous with their time. I think if you're prepared and you go into it, you ask for, you know, you hear about someone or see them speak or read something they've written and you want to get to know them better, if you reach out intelligently, you know, and have done your homework and come prepared to that conversation, I find that many people are very willing to spend a little bit of time with folks. So yeah, definitely just keep following your curiosity. And we are, the three of us are testaments that you don't know where it's going to end up, but hopefully it's a worthwhile journey.
So I'm gonna, Eric, I'm sorry, I have a question that's gonna address or be directed to all three of you, because we hear these words: journey, experiment, serendipity. The background of my question has to do with the experimental process. Dave Danielson, who to the fellows, he's a former director of the EERE, he was at RB, et cetera, et cetera. He likes to refer to the early clean tech boom around the aughts, as James says, as clean tech 1.0, where a lot of mistakes were made. This is kind of background for the fellows. Clean tech 1.0 was around 2004, 2005, 2006. Al Gore's Inconvenient Truth. It was a very simple, underdeveloped investment model, I think is a fair, James, Amy, and please, Eric, comment on that if you disagree with that. But Dave Danielson refers to the phase we're going into now as more clean tech 2.0, where there's more complexity to the pathways to taking your social impact venture to all the fellows. There are more pathways that are, and you find the correct or the better suited pathway for your venture. It used to be a venture, everybody ran to the venture cap. Now it's CVC, now it's Clean Energy Trust, now it's a boutique venture firm. It's different now. My question is I'd love to hear your comments about that, but also, how are you three different? How are you three different? How is it different? Because that way it gives each fellow a chance to think, where do I funnel, if that makes sense?
Well, yeah, so, I mean, there's been a lot of analysis that has taken place about sort of what went wrong, or what are the learnings from, call it, Clean Tech 1.0. Actually, Ben Gaddy, who was at Clean Energy Trust for a number of years and now works for Gates Ventures, he wrote he was a AAAS fellow at the DOE, and his time at the DOE, he started researching sort of what went wrong Clean Tech 1.0. So he has a few papers out there on that. So his last name is Gaddy. I think if you Google it, you can find the articles. They're really quite fascinating. But I think one of the learnings was that the time horizons associated with commercializing hard tech or science-based innovation is very long and not always suited for venture capital. That are, the venture capitalists looks to monetize returns in a shorter time horizon than may be possible with some of these more science-based, deep tech, hardware-based innovations. So one of the developments is that there have been sort of non-traditional investors coming in the space that have much longer time horizons. They're more patient capital providers. I don't know whether Clean Energy Trust fully falls into that bucket, but we invest through an evergreen fund that is capitalized with philanthropic grants and contributions. So we don't have sort of investors breathing down our necks expecting us to return capital within a 10-year time horizon. So we can be much more patient and take bigger risks in earlier stage and more complex technologies than perhaps a traditional venture fund that has limited partners that are expecting returns within a certain time horizon. Amy, I don't know, do you kind of share a different perspective?
No, I think that we're lucky that there are so many great incubators and accelerators around to do this really early funding, this hard work, especially for the things that take so long to mature, because they need capital, they need time, they need sources of capital that are patient, or in some cases aren't even expecting a return, you know, like a grant. They need grant funding, and they need other kinds of ways to sort of mature those technologies, SBIR, STTR funding. And we also have now so many more ways to do business with the national labs. I mean, that was always something that I remember in the early days of Clean Energy Trust. We were trying to figure out how can we support all the great research going on at Argonne National Lab, and how can we bring some of that, you know, intellectual horsepower into the market, but also bring the market into Argonne National Lab. And so now we have chain reactions, and you know, this model of trying to support these really early companies with capital that is suited for that, patients as well as special facilities and equipment, is really, really important. And I will say that, you know, the work that Eric mentioned, Ben Gaddy's work, was really instrumental in the focus that I have now with Buoyant Ventures, but also my prior fund, Energized Ventures. And we recognize that, okay, if you have investors in a venture fund, you're expecting to, you know, build the portfolio and start to deliver returns in roughly, you know, 5 years, and then you have like another 5 years to sort of pay everyone back. And that means you have to work on things that are capital efficient and that do not take as long to mature, in order to give someone a venture return, which is, you know, sort of north of 20%, you know, 20 to 30% net IRR. So you have to be selective with things that can mature in that time frame. So I think that we learned a lot from the first go around. I guess one other thing I would add is the importance, like referencing back to the comments before about interdisciplinary work. The other thing I think that was really important learning from the first Clean Tech 1.0 is the really critical importance of regulation, policy, rulemaking, and energy markets, and all of the non-technical information that you need to understand to know how to bring a technology to market, who you have to work with, where policy can be supportive or a barrier, how to engage, you know, with state, with your utilities, with your, you know, federal leadership, and how necessary that is, you know. And obviously it's a luxury, you know, cost item for a lot of startups to spend money on that, but you have to be really savvy about that. It has to be part of your business plan. And, you know, you need to know how to work with the incumbent leaders, because it's not the kind of industry that you can disrupt and upend. There's not too many people that are Elon Musk that are going to turn the auto industry upside down and suddenly become the most valuable, car manufacturer in the world. I mean, you really do need to work through and with the incumbents, and need to be knowledgeable about the policy environment. So I think it's really, really important to be smart about that. And it's not easy. So that's one of the great things about energy is you have to really love it to be in it, because it is difficult and complicated, and there are so many different factors. So you really have to be committed. And that's one of the things I really like about it too, is that the people that I've come to know in the industry, like Eric and James and George and Eric Vettel, you too. I mean, like everybody who's doing this is really committed to it. And it takes that kind of commitment to really become good at it.
Okay.
And yeah, what you heard both Amy and Eric talk about is the different kinds of capital and the different providers of those capital looking for different things. And so another one that I'm a good representative from, both in my current job at Exelon and prior to Energy Impact Partners with Clean Tech 2.0, is the rise of strategic capital that is looking not only for financial returns, but also strategic returns. 80% of EIP's investors are utilities and energy companies like Exelon, not Exelon, but Exelon's peers, National Grid, Southern Company, Ameren, Madison Gas and Electric, et cetera, who see the strategic value proposition in both on the upside and the downside, right? The upside of what are the technologies and the businesses we should be learning from and working with as the incumbents, as Amy was saying. And on the downside, right, what are the technologies that could totally disrupt our business model? And so for Exelon, that both of those is also very relevant to what we're doing in terms of trying to, we've got a kind of multi-pronged small bet approach to clean tech 2.0, from building our own startups and investing in outside startups, and then the impact investment too, where, again, it's not just strategic dividends, but it's also other impact, climate change, resilience, mitigation, adaptation in our communities that we're in as well. So those different kinds of capital coming in, and the story for Exelon and getting in more seriously in this space was actually that fracking really disrupted our company. And so, that was a tremendous change in the whole electric power and energy industry. And we got caught pretty flat-footed, candidly. And so we don't, on the fear side, we don't want to get caught flat-footed again. And on the opportunity side, right, we want to keep striving, as Chris Gould talked about earlier this week, for a cleaner and brighter future for our customers and communities. So we have to be super engaged, and we have to be investing and putting our money where our mouth is on those technologies, those companies, those entrepreneurs who are going to change things, especially as impact now also includes equity, social equity, income eligible consumers, environmental justice, right? It continues to become more complex. And so how do we bring different capital to bear that is looking for those different types of returns and stack that up to see the change that we all hope to see?
And James, we're going to come back to your point, I think, in a bit about getting caught flat-footed with the fracking, the unconventional plays. I thought that was an interesting point. Oh, there's Shayna's cat. Hello, Shayna's cat. Let's take a step back just a bit, if you don't mind, before we go forward. There's some people, we have different levels of familiarity and comfort with the concept of venture capital. I think one or more of you mentioned the phrase patient capital. Now, if I'm a fellow, or pretty much anybody, if I'm given a choice between patient capital and impatient capital, if I don't know the difference, why would I ever choose impatient capital? Do you see what I'm saying? So it sounds to me, patient capital sounds like the preferable path, and it probably is for energy. Is that what I should be looking for, or is there an upside to impatient capital? This is sort of a step back to go forward. Go ahead.
I can take a crack at that, or James, if you want.
Go ahead, Amy. Go ahead. I'll jump in after you.
I'll take a short crack at, which is, the patient capital is right for companies that need a long time horizon, to mature. So, and the reason you want to get any particular investors is really for the value that they can bring. So some of the folks that are in traditional venture have maybe strong industry relationships and other things that when you're ready for that engagement, that commercial engagement, they're going to be very helpful in opening up pilot tests and prototype relationships and first customer relationships. And, and that's where, again, like the strategics can be super, super helpful. But I think the venture capitalists that make their business out of this, they're really going to, when you're ready for that, to put the boosters on and go fast, that's what they're really designed to help you do, both from a scaling function in their relationships, but also like that's what they're then your interests are aligned. I think if you're just starting out and you really have a long road ahead of you with your innovation, then getting someone who can wait, 10, 20 years is a good partner in the beginning.
Yeah. And adding on to that, I think we all should want ultimately that impatient capital wants to invest in these things. And we've seen that happen because the impatient capital doesn't care about the stuff that the rest of us on this call care about, right? They're not necessarily paying, although it's changing, right? And Eric will talk about that a little bit, I know. But, people who are looking for pure financial returns sooner than later in as low a risk way as possible, right? Depending on what type of investment you're doing, are helpful to still bring extra capital to it and that extra level of legitimacy to the industry. I mean, so you rewind with solar and wind, and it was only venture would invest in it, and everyone else thought it was super risky. So, AK, you needed more patient capital then. Now, solar and wind are as many people are calling it, especially utility scale, boring assets, right? But they're incredibly important to us. So as we, part of one of the reasons why I'm at a big company and not a nonprofit is because I think we need to find ways to line up the business case in the right way at the right time with the different providers of capital. So as Amy said, there's a lot of things that need patient capital to start, and strategic capital and impact investors. And then as that keeps going, you want more money to come in to scale it, right? That's what, Tesla's a good example of that, right? Tesla now raises capital from everyone and is helping to electrify transportation. And that's impatient capital that they have now.
Yeah, I always think it's, some examples can help crystallize some of these concepts. So I believe, did Francis Wang speak prior from Nanograph?
Oh, yes. Yeah. Nanograph. Yes.
Yeah. So Nanograph, a material sciences company, they came together in 2012. It is now 2020. They are still very much in the lab. They are sending small samples to various battery manufacturers. They have yet to have a true design win where their product has been incorporated into a product that then goes into market. It's been 8 years, but they're right on track, right? They're doing very well. They're right on track, but we're talking 8 years of science in a lab, slaving away, trying to make progress. You go to a digital software company that helps somebody find parking spaces, right? You can have, 4 guys sitting in a room. They've got a couple laptops. They lease server space from, Amazon Web Services. And in 18 months, they can go from nothing to $1 billion market capitalization, right? Impatient capital is drawn to that scenario, right? They're never going to go near a Nanograph, which, takes 8, 10, 12, 15 years to get to market. So, so when you hear the words capital light or, digital innovation, a lot of that is also kind of where you see impatient capital gravitating to.
Okay. Thank you. Thank you very much. That's sort of a primer. But now Barbara had a question. Barbara, your question about non-traditional, we've got a lot of social impactors out there. So we want to really explore the boundaries. Barbara, do you want to ask your question?
Hi. So I wanted to know how to identify those non-traditional investors. And I wanted to know what are the reasons they are interested in investing in less capital efficient technologies? And also, are there any benefits of getting capital from these traditional investors or less patient investors?
Go ahead, Amy.
No, you go ahead.
Well, I think so. Non-traditional investors, they can be, individuals. They can be, foundations. I think what the commonality is that they have other motivations in addition to a financial return. So, in our world, sort of a non-traditional investor would be, people who have a deep concern about the environment, about climate change. They may have concern about, resiliency, and they value, solutions that address those concerns almost as much, if not more, than financial returns. So you see there are family offices, which are sort of very wealthy people have what are known as family offices. Part of their operations focus on making investments. Part of their operations focus on philanthropy. And years ago, the two worlds never came together. Now you're seeing family offices be a lot more deliberate in making investments that also align with their kind of or their philanthropic kind of priorities. Amy, do you?
I think that's a good summary. No, I think that's really, and I think that they're putting capital. I guess the one thing is, some of those people are sponsors of Clean Energy Trust and enable us to do the great work that Eric is leading at Clean Energy Trust. Sometimes those people are putting money into funds. So we fundraise from people like that. And they also like to do direct deals. So what you mentioned, Barbara, they often are looking for not just to have fund investments or philanthropic investments, but they're looking to build a portfolio of direct investments. And they can be really active as well. I think they don't usually have big staffs of people to diligence deals. So part of what they do is they try to leverage their relationship either with funds that they've invested in to sort of piggyback on top of their diligence and then follow them into deals, or they'll work with an advisor, that has a bigger team. And so you sometimes also have to deal not just with the family, but go through that advisor and also win them over. And the advisors are what we call in the business gatekeepers, because they prevent you from wealthy people being bombarded with requests. So they heavily screen things out. So you have to get through the gatekeepers a lot of times in order to deal with the wealthy individuals who might be doing angel investing or early stage investing. So I think you can't just rely only on them, but that's sort of different ways that they will engage in investing in the space.
James, do you want to weigh in?
No, I mean, again, the last point I think, Barbara, was, again, is there benefit to having other types of capital in? And it always depends on what you can get and when and what you're looking for and kind of what life cycle stage you're at. It definitely can be very beneficial to raise from other sources. You look at Rivian, manufacturing electric vehicles in Illinois, in Normal, Illinois, and Rivian just raised $2.5 billion to get their R1T and R1S launched. The investors in that are all very traditional investors, big asset investors. But then, earlier than that, they, had from different, types of people. So at each stage, it depends, and depends on what you need and how much you need, right? You don't have to raise any venture, then you can, or any dilutive funding, if you can do it on grants and get there yourself, then that's good. Then you own the whole company. So
I'm going to read, Louis had a question for you all. I'm going to read it because he doesn't have access to audio right now, but the question, I'm going to paraphrase, of the venture startups, entrepreneurs that approach you three, how many are effective and good, for lack of a better word, at communicating their idea to you and to their market? We're shifting a bit, the communication side of business. How effective, when you sit there and listen to someone pitch to you, or listen to someone in your portfolio pitch to a customer, do you say, wow, generally speaking, people communicate well, or you think, oh my, we've got issues?
We probably all have different answers.
James is laughing already.
Yeah,
I am, just because I think to me, it's something that is people often forget and have to pick up later. I think communication is, if you can't sell your idea and communicate your idea logically to partners, to investors, to customers, you will not be successful. If you can have the best technology in the world, life-changing. And Eric and Amy and I have all heard those pitches, right? But if you can't answer questions and if you can't communicate in a logical and compelling way, it doesn't matter if it's life-changing, right? It'll be forgotten. It'll sit in a desk drawer somewhere. So it's something that and to all of you getting started, right? You can never invest too much time in communication skills, written, verbal, PowerPoint, financial communication, the works. So, but again, to Louis' question, it's a variety, right? I think so a lot of time that we all spend is coaching those people on how to communicate better. And and Eric and Amy both help me and our startups on that as well. I ask them for, how can I tell this story better? How might we approach this? How do you think this will be perceived, right? So that we all work together on that, because no one's perfect.
Yeah, I would add, I completely agree with what James said, but I do think it's a solvable problem. So if you have a terrible idea, no matter how good of a communicator you are, eventually you're going to hit a wall. But if you do have a good idea and you're a terrible communicator, you know, you can solve that problem. You can either, you know, become a better communicator yourself, or you can bring on people who can do it for you. Very early on in the, you know, when at Clean Energy Trust, we actually, you know, ran a business plan competition. It was a pitch day, and we made decisions sort of, you know, extemporaneously that day based on the pitch, and then awarded grants to the companies. And one of the challenges we faced was there would be some companies that came up that were exceptional presenters, and they did very well in sort of the pitch format. And then there were other sort of entrepreneurs who would come, and perhaps English is their second language, and they just were not very persuasive communicators. And I think we realized pretty early on that we were missing some, you know, really interesting ideas by sort of not being able to dig in behind that initial communication and initial delivery. And over time, we've shifted our process in part because of that, so that we actually can spend time and understand the underlying technology, the underlying intellectual property, the underlying business model, and not just the upfront pitch.
Would you say that's sort of clean tech 2.0 too? That's sort of an evolution or maturing of the industry, right? Where they learned.
Yeah, I think that's part of it. I think clean tech 2.0 though, definitely, I mean, some of the learnings that have been incorporated in clean tech 2.0 are you know, there's just a deeper level of sophistication on the part of investors than there was perhaps the first time around, around policy, regulation, understanding just the critical need to identify sort of really high margin beachhead markets, so that you're earning enough money to carry you through some of the dry spells that you might encounter. You know, little things like that, where people have, you know, realized that, you know, don't dump, you know, $100 million into a massive manufacturing facility without knowing what your end market will be. So, you know,
let me just add to that the biggest mistake that I see people make when they're pitching their business is they're focused more on what's novel about the technology and not enough on why it matters. Like, what real problem is it solving? What is the market for this, and why does it matter? And so that's really important shift that needs to happen in order to attract investors, is that you've got to be addressing a market that is, you know, not $100 million market, but really $1 billion market, and or more than that nowadays. That you really need to think about how you would bring this to market, you know, what the pricing would be, and then the novelty of the solution is important from a competitive standpoint, but it should absolutely be delivering some kind of, you know, greater profitability, some economic value to the customers. And if you don't have a good sense of what that is, then you're not going to get a very receptive audience from investors.
Okay, thank you. We got some great questions coming. Sorry. So we're going to start bouncing around because we're watching the time too. Hey, Mark, and then we're going to shift to Jay pretty soon, because he raised a question in our previous panel that I'd like to spend some more time. We'll get to that in a second. But Mark, do you want to ask your great question? I thought it was really thoughtful.
Yes. So thank you, Eric, James, and Amy, for the wonderful presentation and for sharing your experience with us. So my question is, now we have a lot of entrepreneurship competitions where upcoming entrepreneurs get to pitch their ideas for potential funding. So how can one safeguard his or her idea in such competitions in case you don't get selected? That is to avoid someone else picking up the idea, and by the time you get funding to start, maybe somebody has started something similar or even the same thing that you wanted to do.
How stealth should you be in these pitch competitions? Good question, Mark.
There's always people working on the same idea. So I hate to break it to you, but it might be a little different. It might be slightly, you know, behind or maybe slightly ahead. But I think that I mean, if you have something, if you have something that is maybe very tenuous from an intellectual property standpoint, then you have to find a way to describe it that doesn't betray your potential patentability of it, for sure. And you want to be cautious about that, or maybe get some more work done on the patent portfolio before you begin publicly talking about it. But it really is an execution play. This is really about kind of how good you are at bringing this to market and developing it. And then it is a race, and it's good to have competition too, because if you're the only one going after something, then it may be much, much harder to fund, because it's hard for the investors to understand. They usually, a lot of investors, they want to see sort of a cluster of innovation happening. And then, it makes it easier to evaluate. If it's just the only thing like it, people don't trust maybe how real it is, and also may have a hard time understanding, who will continue to fund it after them.
Yeah, and I think to that point too, back to you don't want to share your idea. If all you have is kind of the novelness of your idea, your business is probably not that defensible anyway. You got to look in the mirror and work with your team on what is going to give me and my team and investors comfort that we will succeed in the space. And by the way, as Amy said, also competition is good, and most markets aren't winner take all anyway. So, it's not just that it's a good idea, but you've got a great team, you've got great network, you've got great advisors, you've got an amazing go-to-market strategy. Back to another thing Amy said, the customer problem is really real. They feel that pain point. It's not just an idea in your head. It's not just some cool tech that could do something differently. It's actually that there's going to be customers out there who really want it and are going to grab it from you, right? So it's that comprehensiveness that's that matters most. And if it's just your idea that's different, and you don't want someone to steal that, then it's going to be hard to succeed anyway.
Eric, do you want to weigh in, or you?
Well, my only comment is that when you're starting a company and raising capital at the very earliest stages, it really behooves you to be creative and scrappy. And again, citing Nanograph, they were founded in 2012. I think they raised, $1.2, $1.4 million of their early capital through business plan competitions. Then they've been very, very smart and strategic in pulling down, grant funding and other sort of non-dilutive funding opportunities. So they've taken in very little outside money from investors. But the point is that, the business plan competitions, they were very smart, and it was very, they went out and they raised a lot of capital through that kind of avenue. So I think you can work around the concern of having your idea or IP, lifted by just, deciding, intelligently what you disclose and what you don't.
So Eric, Amy, and James, we're going to shift gears because it feels like this is the right time, because this idea of going fast, competition, et cetera. And I'm going to, Jay, get ready, but I do want to give our panelists the chance to understand where all the fellows are coming from. It would be unfair to throw you in without some context. The conversation, I'm going to try to paraphrase, and then Jay and then Corinne, be ready to piggyback on Jay's question too. The question is, in a sense, they may not know it, but they were referencing what happened with solar early on, and is sort of what's happening with storage currently, meaning in the international market, where governments, non-US governments, are some, just a handful, are capable of investing or de-risking a venture and taking it to scale at a much faster rate than a more competitive based market, that traditional market. So you've got, and let's look, China's ability to take greater advantage of or control of the solar market, right? On the other hand, and here's where the controversy lies, right? For many of our fellows and beyond seeking social impact, the Gigaton challenge, we need to decarbonize as quickly as possible. I think that's what draws Eric, Amy, James, you into your field as well. And the question is if our goal, our ultimate goal is to decarbonize as quickly and dramatically as possible, because some might think it might be too late, right? Who cares why not just throw it all out there? If governments want to throw money in, let them. Jay, do you want to, I think I've summarized, but Jay, let's have you jump in and ask your question. Karan, be ready, because we're starting to go in this direction now. Jay?
Yeah, thank you for that introduction, Eric. And I want to thank the panelists for taking some time out of your schedules to talk to us more about venture capital. I know I've been chatting with some of my friends who are watching on YouTube, and we've had they've been very interested in how it works and how it impacts social entrepreneurship. In our last session, we talked about really nationalism in trade policy, and it's been a theme that we've seen throughout the our panels from day one around the quote energy security. And as a scholar of energy policy, that traditionally the United States has meant something very different than true security. It's involved in interventionist policies that have done some lovely things in the world. And so the question we had, the early session and we were talking about in our chat really is, if we're trying to decarbonize as quickly as possible, as Eric said, why does it matter who is funding the technologies? It goes beyond solar and storage. It goes into sustainability measures. It goes into efficiency measures and even nuclear technology. We consistently hear American leadership is needed. America needs to lead this way. That really is 21st century red baiting, strikingly similar to anti-Soviet conversations that were had, that really are a disservice to the global need to address the Gigaton challenge. That could really drive, if it continues, I mean, we get into America first trade wars that don't really help innovate in this space, if you will. So my question really is, in terms of who is funded by venture capital, how do free market venture capitalists, and I use that term loosely because the US government does do a lot of funding in this space, how do venture capitalists work with governments to fund the best solutions on an empirical basis, not a national basis?
By the way, Amy and Eric and James, I just know, Corinne, I've been following. While you prepared to answer, Corinne, do you mind piggybacking? Is that okay, Corinne? Am I putting you in an awkward? Because I think your question relates to what Jay just asked.
Yeah, of course. Hi, thank you so much for speaking at this panel. I really appreciate it. So I'm an international affairs student, and I've taken a couple classes with trade and like sustainability. And my question was really related to trade protectionism and these subsidies that like China often offers its domestic industries. Does venture capital often think of the risk of trade protectionism when funding certain ventures? Because I'm sure there must be some disincentives for investment if a government is providing aggressive subsidies to their own domestic industries in an area. Mm-hmm. I was just wondering if you could talk a little bit about that.
So I can quick comment. I mean, we talked up front about Clean Tech 1.0 and just the billions of dollars that were lost during Clean Tech 1.0. Much of that money was lost in sort of silicon solar, and was lost in large part because I think the investors underestimated China and the sort of the trade protectionisms that China would pursue, and basically the domestic manufacturers here in the United States got blown out of the water by the Chinese, and the investors in those domestic manufacturers were hurt badly. So So I think there's greater wisdom and awareness of that type of exposure. I do think what we've witnessed, there is a rise, of late, especially of, who's going to compete and win in the energy transition in the future, sort of the new future economy. And and we've seen, we've had two instances where investments we've made have got caught up in a process called SIFIUS, where they were in process of being acquired by a foreign company, and essentially the U.S. Treasury shut those acquisitions down for concern over loss of critical intellectual property developed here in the United States to a foreign power. So I think you'll see more and more of that taking place, particularly around critical metals, energy storage, and other types of technologies like that.
I'd like to jump in to address a little bit of what Jay was getting at too, and I think the question is, to try to solve this problem globally, it's really about at what price, because you have to look at, take for instance, carbon sequestration. At what price do we want to try to do this? Because if you have to subsidize it, or if you can't find investors that want a return on their capital for a solution that's not economically competitive, it may be a great technology, but it may be very, very hard to find investment dollars for. And I'll let James talk a little bit about nuclear, but that's a challenge that nuclear has had as well, is that it doesn't emit pollution, but it's so expensive compared to other forms of energy, and the price of renewables have dropped, and natural gas has dropped so much that do we keep subsidizing and funding a clean emitting power source at the risk of others? So I think that these are the questions. It really becomes a larger economic question of, when we have some of these solutions available, first of all, are they available at scale? And then, are they affordable? How do they compete in the market? And you probably, what we all want is we want economically competitive solutions that deliver affordable, reliable, clean power to people, right? That's what we're looking for. We need the affordability is a really important piece of it, because you don't want to be relying upon subsidies that could change with political change and elections. And you also don't want to pay too high a price for that, so that you don't have a power that is not affordable to a large number of people, right? So we've become accustomed to relatively affordable power, especially in the United States, that we have relatively cheap power. So that's a big factor in all this, and the underlying economics of that. It's not just as easy as picking the solution that could have the most impact. It has to function and compete in a market with other solutions.
Yeah. Just jump in with a question.
Sure.
About what you just said, Amy. You talk about making solutions affordable, and I know that Chinese subsidies, particularly with solar, drove a lot of American producers out of business, but it also dropped the solar production costs.
Yeah.
So, I mean, could you sort of talk about the wisdom there? Like, is that type of subsidy necessary, or are there other costs that we would face as a result of those subsidies, particularly political and trade costs?
Right. Well, I think so. It was very effective for a period of time to make solar energy very affordable, but also to enable the Chinese manufacturers to dominate the market, right? So there was a very clear intention there. So I think that's part of what was successful about it. It no longer, there are still subsidies that are phasing out for wind and solar, but even without subsidies, they're still cheaper. In North America, there's still a cheaper source of power than coal, than nuclear, and in some cases, even natural gas in certain markets. So now that subsidization has been effective at driving the prices down, there is a lot of question around, do we continue to support these technologies? Do we phase them out? But one thing that's important to identify is that the oil and gas industry has taken in subsidies for decades and decades and still does, and is highly profitable, typically, not when it's at, $30 a barrel or less, but when, at sort of an average price, it's been very profitable. And yet those industries are very successful at continuing to get subsidies. So this political nuance is really, really important when you're talking about introducing and supporting new technologies. But I think most people, most capitalists would assume that it shouldn't be forever, and that it's not really sustainable or a desirable solution if it requires subsidy for an extended period of time.
If I can jump right in really quickly, Amy, I think that is what's at the crux of the debate. I've had some fellows messaging me that there seems to be the expression I was given was a rubber band snapping back and forth, that at least in the United States, we can't discuss this without the context of capitalism. And so I think that this all boils down really to, if this is truly an existential issue that the world needs to address today, that people will be dying and we will not have a habitable planet in the next 30, 40 years. Why are we relying on a capitalist solution when we know that if our governments take action, we can go to the moon, we can go to Mars, we can stop polio, we can stop this? Why must we rely on the same capitalist structure that drove us into this in the very beginning?
Well, I'll answer that, Jay, and I have a couple other points on your question and Karan's as well. I think the great news for someone as a citizen, I'm speaking as a citizen, although Exelon as a company is very committed to action, is that people like all of us, individual citizens, are putting pressures on our government to look at different tools to solve this problem. And I'm no expert on it. I'm not part of the Biden campaign, but the work that the Biden-Sanders Unity Task Force did on this is taking a pretty strong governmental approach to invest in the kind of infrastructure we need to decarbonize. And that's not only cleaning up the electric power sector, but that's also electrifying a lot of other sectors and getting fossil fuels out of those supply chains. And so I think there's an increasing appetite for government support, recognizing that there are market failures. And Amy and Eric and I all recognize that there are things that government is in the best position to fund, that it's going to be hard for quote unquote purely capitalists to do. And that's happening not just here, that's happening all over the world. So I think that's great. The other thing with the couple of things that I thought of too, relative to your point on we need to decarbonize as fast as possible, which I think we all agree with, when it intersects with the international affairs lens, is first kind of everything is local. Second, I would say, is about international coordination and intellectual capital. And then the third is on the kind of the local environmental justice and kind of equity side. So the first one on everything is local is that, to your point on who's doing what, we all hope and want that each country takes action within its own borders to speed this along, right? So whatever China or the EU or the US are doing on investing in things outside that have kind of global competition questions, right? It's to me, at the end of the day, how are each of those countries lowering their carbon intensity and their emissions and getting to net zero as quickly as possible? So that's something we can and all should support. The second one, I think, is that, and again, Exelon's been a big proponent of this, right? But as much as there's international competition, there's also cooperation, and we, Exelon, are a big proponent of that and work with utilities and electricity generators around the world. And kind of philosophically, we think that the best and the brightest working together is the way to do that. Similarly, again, that intersects with immigration policy too. Which universities and where can students go who are aspiring to work on this, so that all the best and brightest are able to contribute appropriately to this challenge. And then I do think, as I said on the equity piece, I think there's still, regardless of kind of red baiting or anything else, there's still how do we clean up our communities and how do we help the people that have been disinvested broadly in the broader system, right? And I think you've seen a lot of that in AOC, how she talks about the Green New Deal. And so there's definitely a local investment and an economic opportunity and an environmental justice lens that is still kind of fundamentally local for each of us to deal with.
I'd like to throw in, since you raised the political issue, James, that, you know, we are still, I think, the only country that isn't part of the Paris Climate Accord, right? So theoretically, and that international coordination is really important for this kind of global issue. And we have attempted at that, and we all have a responsibility to vote for leaders that will want to participate in that partnership. But I think the one thing I want to maybe point out is that, you know, I've been in this business, in this space, I count 2004 as my first year when I started working on fuel cells at Stanford Research Institute. So 16 years. And I think I've always hoped every year was going to be the year that we really break out. But the thing that I'm really encouraged about now is the action and funding that's happening outside of the US borders for some of these technologies, you know, some of the policies that are moving, you know, other countries to electric vehicles faster than we had planned, even in a bad economy like we're in now. And I feel like with a presidential change that we may be on the verge of a very strong growth opportunity for climate related technology and business. And it does require policy support. So we've been talking a lot about that, but we can't get certain policies passed unless we have people in places of leadership that care about this. And that's where you guys, you know, and getting your peers to vote, you guys have been underrepresented in the last several elections. So we really need you guys to vote and get all your friends to vote and vote on the values that you care for, so you're represented properly with people who are going to act on this in the next few years. And then we are, you know, given the pace of development of the technologies and action internationally, I think we are potentially on the precipice of some amazing positive change that can happen in the next 5 years.
Eric, do you mind if I jump in, Eric? Is that okay? Or do you have, Eric? Okay. So thank you, Amy, James, Eric. So I'm going to just try to complicate this just a little bit. The binary, you know, the competition versus government funding, for lack of, I'm going to oversimplify, China, US, there's a third leg to the stool, right? You know, Melanie Kenderdine brought up on Monday, way back on Monday, at the very end of her talk, that one region that pays the price in this is Africa, and the Belt and Road Initiative and the extraction of rare earth minerals and elements. And so even in that that binary, where the competition, somebody's still losing. How can we take into account the third leg of the stool?
So I'll jump in real quick because I have some friends working in this space. I think first is really that the climate change problem needs to be solved very lowercase d democratically. That there are solutions needed everywhere, and everywhere is a little different. And so, so you know, you look at one of my friends, Jeff Stein, works for a fund that is specifically investing in entrepreneurs making a social impact in sub-Saharan Africa, from Tanzania to Nigeria, and there are businesses being started in those places that need capital that are addressing uniquely local needs, and where customers have pain points and problems that they need solved. And so I think, to me, the hope that I have around that is that it doesn't have to be zero sum, because when there's a climate related innovation that helps in South Africa or in Nigeria, Ethiopia, that's a win for the planet, and that's a win for the local community, and that's a win for the local entrepreneur who saw that pain point and that solution. And there's all sorts of other, you know, capital going into this, from microfinance and, you know, stuff that the Gates Foundation has been working on. But again, obviously, resource intensive and extractive kind of traditional hegemonic competition can feel that way, but we're not going to get I don't think we're going to get to solving the Gigaton challenge in that way. It's going to be everyone taking action in some way, shape, or form, and it should be a win for them, and it should be a win for all of us.
It doesn't have to be zero sum, does it? That's a false objective. That's a good point, James. I do want to watch the time. I'm so sorry. We got to be careful with the time. I'm going to shift gears, just tone it down. Now I'm going to tap the brakes on just for a moment. There's a great question. It was early on in the thread, but I'm going to expand upon it. I was wondering if each of you, Eric, Amy, and James, if you could, if you had one word that's key for all the fellows, if it could be part of their DNA, or if it is, and just to pull more of it out, what would that be? Your one word of advice? It's I'll give you an example of someone earlier who said grit. They said grit, just keep getting up off the mat and keep going. But I was wondering if you have one word of advice for all the fellows in these really, honestly, unprecedented, difficult times. They're going to write books about this generation. They wrote about the 20s, the 40s, 1968. Well, this generation is going to have books written about it because it's been .com bust, 9/11, Great Recession. I mean, it gives me chills. So one word of advice for an amazing group of people.
I'll go first. I was thinking hustle. I think you guys really have to hustle and creativity. It's not going the way that you had wanted. You're going to have to hustle and figure out your path through it. And if you have to hit the pause button and go make money doing something that isn't your dream, then go do that so you can live to fight another day. If you need to have a side gig or something else so that you can pursue your dreams, it's going to really take that hustle, and then being, not worry about straying off the path, and that creativity. Like, we're all, I think we are all coping with that. We're all figuring out how to get through this time intact and growing, and and I think that so we're all struggling with it. It's not just you guys starting out in your career. But the hustle will always pay off.
Eric, thank you, Amy. Eric?
I was going to say perseverance. That's somewhat, synonymous with grit. I mean, the other is, I think, optimism. Not Trump-like toxic optimism, as I think Mary Trump coined it, but more, realistic optimism. But really, just not to get depressed, not to give up, but to be optimistic that human ingenuity and creativity can carry the day. So
thank you, Aaron. Thank you. James?
And I'll go with relationships, because as much as we talk about technology and money and systems and governments and policy, at the end of the day, it is individual people and groups of people who will work together to get things done and to build coalitions and to forge compromises and to forge progress. And that applies on the micro level for you in your individual career and as you work on bigger and bigger problems. So keep building relationships, keep finding ways to build bridges. It's the people that will work together to solve this and advance your careers.
Thank you. Eric, Amy, James, again, Eric, we're going to be tuning into your webinar. James, 2C2I. Amy, thank you so much. Your introductions, everything have been fantastic. Best nerds on earth. I think you coined that, right? Thank you. Thomas, do you want to take us on in?
Thomas is the best nerds on earth coining.
Actually, no, that wasn't. That was someone else at CET who claimed it. And I was like, I'm literally going to steal this from you. So it did actually come out of Clean Energy Trust. And that was like 6 years ago. And
you're right. Okay, no, now I remember. That's hilarious. Okay, I remember. Thanks. Thanks.
No, it was all y'all. Thanks so much. And that's Eric's, I know that's your baby, and now it's kind of Eric's teenager or whatever you want to call it.
Yeah, you're right, Thomas. You're right.
Awesome. All right. Thank you all so much for coming. And everybody else, we'll see you back here in about 12 minutes for a debrief.
Thank you.
Thank you.
Everyone.
Take care. Good luck. Stay safe.